Good morning, and thanks to everyone for joining Tecnoglass quarterly call. We're going to go through the highlights for this quarter. Again, a record quarter in many financial metrics with revenues up 16%, with both segments, single family residential and commercial construction, contributing at a double digit rate to an all time high of 255 million for the quarter. Orders on the single family residential side up 29% sequentially. So that bodes well for what we should expect from the segment in Q3 and potentially into Q4. Gross profit margin up 400 basis points. We're going to go into the puts and takes as to what allowed us to outperform last quarter from last year by 400 basis points from our gross profit margin perspective. Adjusted EBITDA up 25% to approximately 80 million, so a very strong quarter from that perspective. And the perspective for the rest of the year in terms of demand continues to look strong, with the backlog reaching again an all-time high of 1.2 billion, which is up 20% year over year. On an operational side, we introduced a new line of aluminum windows called the Legacy line, designed for the West Coast. And to that extent, we are signing a lease and opening up a showroom in the Q4 of this year in LA, and completed the acquisition of Continental Glass in Florida, as discussed in the last call. Moving into the next slide, the backlog, as just mentioned, was at an all-time high of 1.2 billion. If you look at the backlog execution and the type of projects that we have, we're moving more and have been moving more into the high-end condo market and high-end projects that are less sensitive to interest rates. And as a result of that, what we're seeing is more visibility over a longer period of time, because these are larger projects that get executed on a multi-year horizon, as opposed to the typical conversion of 18 months. So we're essentially are already building into 2026 and 27, giving us more visibility going forward. Moving on, the single family residential space is continuing to perform very well. It was a record Q2 for the company, and the second highest quarter in record at 110 million in revenues for Q2. As I was mentioning earlier, orders are up 29% sequentially, and that's a result, obviously, of strong market performance, mainly in Florida and the Southeast, but also the fact that we see a modest pull forward related to the adjustment in pricing that we announced in May, as a result of some of the tariff dynamics that everybody knows. So we think that some of that is actually related to a pull forward, but a large majority of the orders continue to come from our geographical expansion and from the outperformance of our main markets relative to the broader US. Moving forward, the revenue bridge, as I mentioned, both segments contributing nicely well into double-digit pace, allowing us to achieve 16% growth year over year on a consolidated basis to 255 million, which put us at a pro rata revenue of over $1 billion in revenues for the company. The double-digit growth on the commercial side was helped in a modest way by about $5 million, as it relates to the Continental Glass acquisition that we completed in May. From an EBITDA perspective, in the next slide, volume, obviously helped with 16% growth from a top-line basis, but we also got, about $3.5 million worth of operating leverage on those higher volumes. FX is helping with a 7% devaluation of the peso year over year. As we mentioned earlier in the year, we were able to cover the second half of the year as we enter into hedges, which allow us to kind of hit the 4,400 peso per dollar rate, which is about 10% better than 2024. Some of those benefits were offset by higher SG&A, mainly related to higher aluminum tariffs, and the tariffs that were not present last year. The aluminum tariffs were mainly to be accounted for in March and April. And going forward, we were able to change supply chains in order to mitigate that impact. We still have to kind of, since we're sourcing U.S. aluminum, we're encountering higher aluminum prices that we're expecting to fully offset via the pricing adjustments that we did in May. So we expect that to be kind of a net zero impact for the year. From a balance sheet perspective on the next slide, we continue to be in a very good place. More than 300 million in liquidity between cash and our committed facility. Right now, we're at a net cash position of about 30 million and expect to continue generating free cash flow the rest of the year. The second quarter of the year is the hardest in terms of working capital because we have all of the income tax payments due from the prior year. Going forward, Q3 and Q4, we don't have that impact, and CapEx is expected to step down. So we're expecting free cash flow to continue building up and continue solidifying our balance sheet. Finally, from an outlook perspective, we're adjusting what we have provided to the market last quarter. We're increasing our revenue range from 960 to 1.02 billion to 980 to 1.02 billion, accounting for the outperformance in Q2 and based on the order levels that we see on the single-family residential side for what we expect going forward. We're also adjusting our EBITDA range from 305 to 330 million, now 310 to 325 million, based on the performance for Q2 and what we're expecting going forward. With that, I leave you, and thanks again for joining Tecnoglass. Hope to see you in the next quarter. Thank you.